This is Taking Stock on Bloomberg. I'm Pimm Fox. Today's jobs report took economists and many investors by surprise. The economy adding only 39,000 jobs last month. This is after adding 172,000 jobs in October. Unemployment rate rising this month to 9.8%. So why didn't the experts see this coming, and what does it mean for the recovery? My guest on this issue, David Semmens. He's an economist at Standard Chartered Bank, and David Semmens is a Bloomberg best when it comes to analyzing the economy. We also have Jeanne Branthover, managing director at Boyden Global Executive Search. Boyden Global Executive Search is one of the most highly rated financial services headhunting firms. So we're going to get two views on what's happening. All right, David Semmens, you first. What happened, as they say, or, you know, I guess Ricky Ricardo used to say, what happened?
Well, everyone was looking for a relatively good number, still not strong enough to pull down unemployment, but unfortunately the number was weaker than expected. You had people coming into the job market, which wasn't enough to really lift up the participation rate, and then unfortunately you saw more job losses in the household survey, so you saw people losing their jobs in that respect, and there's a higher number of unemployed people, which pulled the unemployment rate up to 9.8. And unfortunately, that's going to be grabbing the headlines ahead of people going out and doing their holiday shopping this weekend, and that's what's going to be weighing on people's mind going forward.
You sound like an economist, because I mean,
I am an economist.
I know you are, so it's good that you sound like an economist, because the idea being that, but why is this happening? I understand that there are not enough jobs being created, not enough people getting work, but is it because there's an artificial economy out there, and because we certainly have had stimulus programs, we've got the $600 billion that were announced by the Federal Reserve, quantitative easing, buying treasuries. Is it there's just no real economic activity? People are just, keeping their money under the mattress?
I think it's just because of the uncertainty. Firms are still holding off from hiring, but unfortunately this month we didn't actually see any increase in the hours worked, which is also a concern. The only real bright spot I could pick out of the entire report was the fact that you saw temporary workers increasing, which obviously is good for Jeanne as well, because being on the recruitment side of things, but that's very much a leading indicator. So that's a good shift in that it could be a strong leading indicator for hiring going forward, but it could also be a structural shift, and you see people getting hired on temporary contracts rather than full-time contracts, which would be a bad shift also.
I can see this is like finding a little speck of gold on a whole beach of gravel, Jeanne Branthover, are you seeing the same thing? I mean, I know that your business is focused on financial services, so this means big companies in places like New York, in London, in Hong Kong, Shanghai, and so on. Are you seeing the same thing in terms of the job? No. You're smiling.
We were talking about this earlier. In the financial services industry, what we're seeing right now, we were just saying it's the busiest December we've ever had in the search business. And the reason that we're seeing it, and I have some of my own views of why things aren't so good in November. If you remember when we were talking last time, November tends to be when they cut the bottom 10% and when they really get rid of underperformers. So it's not really that surprising to me that November would not be an uptick as far as bringing on people, but it would definitely be an upper number as far as getting rid of people. But now what we're seeing is a real commitment from clients of paying for retained search now for people that are going to start in the new year. So we usually don't see this in December. We usually see closing out searches or not getting anything until strategizing with the client till January. But now we have active, what we want to do something, we want to hire, we want to make a commitment. They're paying their retainers, and they're starting to look for people now to start next year. So we're going into a real high going into 2011.
So David Semmens, does this indicate that we're basically talking about two very different economies that exist side by side?
Well, the thing is, the financial services sector is always a leading indicator. So when that turns around...
So this is good news.
That is good news. But then again, we were saying a similar sort of thing back a few months ago when we were both on together then. And so, but it's a leading indicator. So unfortunately, that's not going to be fulfilled until probably the middle of next year, when you start seeing hiring in the broader economy having the spillover effect. And unfortunately, it's the broader economy that really affects America as a whole. We're talking about the financial services sector affecting very small pockets of the states. And although it is a big component, it's not enough to drive growth to the sort of 4 or 5% mark that we want to be seeing.
Do we have a structural problem in the United States? I mean, is this more than just a recession that occurred because of a financial crisis? This is now something that has to do with the way people work, the cost of labor, what we make, what we don't make. Is this a structural issue?
Well, I mean, the biggest structural issue is you had so many people working within construction and financial services, and there was a massive overinvestment in human capital in those areas, and now there's just not the demand. And unfortunately, those were very good-paying jobs at the time, but now those skills don't transfer very well, and so people have to go out and retrain. So you are seeing a pickup in demand for labour when you look at the JOLTS survey, which we get next week. But unfortunately, that's not translating into hiring because the jobs that people want, they're not skilled for, and they have to retrain, and then they can get the wages that they want, which will make them take those jobs.
Jeanne Branthover, does this indicate to you that the financial services industry is sort of on another planet when it comes to the future? Because if the real economy doesn't start growing, what are they going to be doing all this financing for if not for real companies?
Well, you know, in my office, we aren't just financial services. We have retail, and we have consumer products, and we have life sciences. And we're getting calls in those industries also for 2011. So what I do think, as just what David was saying, I think financial services is the leading industry that, you know, even from the beginning of the year and the mid-year, things went up, things went down, and now they're coming up again. That's the beginning of the rest of the economy and the rest of the United States. And we're really growing from the United States into the BRIC countries, into, you know, various parts of Asia, so that we're growing externally, and then internally we have the foreign companies coming here. So things are, I think, going to be on a much more upturn in 2011.
All right, well, let's hope so. All right, I want to thank you very much, Jeanne Branthover, coming to us from Boyden Global Executive Search, and David Semmens from Standard Chartered Bank.